Hey, good morning, everybody. It's Hammer. Today is Friday, May 29th, 2026. That's right. May is just about over. We are heading into June, the last month of the first half of the year. Where does it go? Where does it go? So, anyway, that's right. I am Hammer, and George is looking for attention this morning. As you can see, George is looking for a little bit of love. What do you want, George? You going to talk to everybody? Anyway, I am Hammer. I am the founder of Hammer Solutions, home of great products to help my originator friends get more business like Originator Success, Grab and Go Social, and Rate Sensei. Okay, Mr. George, you are getting to be a bit of a distraction. There you go. You want to say hi to everybody? Say hi to everybody. There you go. Anyway, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasted to you on Facebook and on YouTube. Remember that if you would like to join me live, not miss any of the show, you sign up for our text reminder because Facebook, YouTube may not always tell you that I'm going live. You can sign up and get a text as I go live at hmmr.io/reminder. That'll give you the quick links so you can jump on, not miss a moment of the show each day. You can also use this cool QR code over here. If you're on your phone right now, take a screenshot and that will you can go ahead and do your photos and bring it back up in a little while. Also, remember that you can go ahead and you could get signed up for our free email lock advice, which went out already this morning at www.ratelockadvice.com. You can go ahead and sign up for our text alerts at www.ratetextalerts.com. So anyway, that's enough about that. Let's go ahead and if you're here live, say good morning. If you're watching the replay, do me a favor, give me a hashtag replay. Good morning and welcome to all the live folks. Eric McDonald, Bobby J. Jones, Mallory Fotiadis, Patrick Campbell, W. Richardson, Rob Stewart, Carolina Small. Good morning, all. So let's go ahead and jump in and get started. Good amount to cover today, and we'll start off with what happened yesterday and where things were at. First, let's go ahead and talk about where we're at this morning and the technicals. This morning, mortgage-backed securities are basically flat on the day. They're up a couple of basis points. We're going to call that flat on the day. 10-year Treasury yield, 4.44, arguably, if you want to round it up, 4.45. Not the worst that we've seen by any means. In fact, that is basically about where they ended the day yesterday. So they're flat on the day as well as the initial run. So let's talk about what happened yesterday and why it happened. So if you remember when we were doing the show in the morning, mortgage bonds were actually down a bit on the day. We had seen some volatility right here in the morning. Let me just bring this up a little bit so you guys can. All right. So we saw at 8:30, there was a bit of a reaction to the economic data. It did help bonds to improve a bit, but they ended up giving back those gains. If we look at that in the 5-day perspective, what this shows us is that on Wednesday, we were right here on Wednesday and where bonds ended the day on Wednesday. And we were actually down on the day. We were down about 7 basis points here. And then after that, you could see that we've got a nice improvement, nice run up on the day. And if we go back to the 2-day chart, you could really see news broke right here and improved on the day. And that news that helped us to see that happen was the scoop from Axios that the U.S. and Iran had reached a deal, but that it did need Trump's final approval. So again, it was basically a leak of a deal, but it was not a true deal because Trump hadn't given it. So once we saw that news, we saw mortgage bonds improve significantly through the afternoon, going from minus 7 basis points here to about plus 20 basis points here to end the day. So we saw a lot of nice improvement. That was a swing of about 30 basis points, which was enough for most lenders to reprice better by the end of the day. Almost everybody. When you see that much of a swing, you're going to see lenders repricing better, which you don't always get. So it was really nice to see that as well. Now, what does that mean for rate sheets today? Well, again, today, right now, we're kind of flat. Most of those gains happened yesterday. We're kind of flat on the morning. But if we take a look and see where that puts us, according to Mortgage News Daily, we didn't see as significant of a rate sheet improvement yesterday as we could have seen, only a couple of basis points improvement. So there's room for rates to actually improve a little bit this morning, even though when you look at where mortgage-backed securities are starting here, they're not far from where we were yesterday at the end of the day. But rate sheets will definitely be better than what you saw in the morning. But in the morning, they're probably a little bit, would have been a little bit worse, probably like 6.62, 6.63. So the reprice is better, ending the day yesterday around 6.59. If we take a look and see, kind of looking at the chart here, remember February 27th, this was our lowest rates right here. This is the best rates and pricing. You could see we are still significantly higher, much, much, much higher than those low fives that we were, not low fives, I'm sorry, high fives that we were in right here at the end of February. It's still a big jump. However, it is nice that we have seen, that we pulled back from the worst rates that we've seen. We got improvement here. That's why it's in green, because rates are going down. But this right here, these were, basically our worst rates of the year we had seen. And that wasn't too long ago. It was only in the middle of May, around the 19th, when things were looking bleak on a deal and markets were giving up optimism that we would see a deal get done. So right now you're, in a good spot. Reprice risk on the day is low. As long as we don't see anything that Trump has rejected this deal. That's the key, right? So everything shows it's pending Trump's approval, I read yesterday that Trump had put out there that he had asked for a couple of days to kind of think it over. And that's going to, of course, kind of, have a bit over the weekend. There's a little bit of risk over the weekend because of that, but I'm trying to get that lined up here. So, but that's the deal. Now, let's talk about what this deal talked about and why it's there. Now, by the way, if we get news that Trump does support this deal, then you'll see rates improve a little bit today. You'll see bonds continue to improve. We'll go from up a couple basis points to back up 15 or 20 basis points. You'll see another 20 basis point jump today if that were to happen. Now, let's talk about a little bit about what this was here and kind of the key, right? So in the agreement, there's a few different things going on. Basically, it's a 60-day. It's a preliminary deal to extend the ceasefire 60 days, discuss the future of Tehran's nuclear program. Again, this is kind of all leaked. This is according to a person with knowledge of the matter, right? Vice President J.D. Vance said the U.S. and Iran are going back and forth on a couple of language points, including over issues relating to Tehran's nuclear capabilities, and that Iran appears to be negotiating in good faith. This is the key right here. It shows that blockade is working and that Iran is feeling a lot of pain, which is there. Now, this is an interesting article from the Wall Street Journal, going over a couple of the headlines today. This is an interesting article from the Wall Street Journal. We tracked Iran's secret ghost ships transferring oil at sea. So, they're still supposedly getting some oil out of Iran, but the blockade has really, really knocked that down. And it's a big part of why they need to get a deal done, because they were trying to basically wait out Trump and the rest of the world, the idea of midterms and everything coming into play. And they're unable to do that if they don't have any money coming in to fund this regime. So that's where things are at here. And as far as the key on why this is such an important deal, though, is right here. The U.S. official said the 60-day MOU, I don't know what MOU stands for, will state that shipping through the Strait of Hormuz will be unrestricted. A U.S. official said this means no tolls, no harassment, and that Iran will have to remove all the mines from the strait within 30 days. This is the key right here. This is what will help mortgage rates and pricing. The reason that would help mortgage rates and pricing is because it's going to help oil prices. Once oil starts moving through, here you go. Oil is currently down 91.91. That is a huge, huge, huge difference from being up where it was here at $112 a barrel. here we go. $112 a barrel up here. That was only, again, around that 15th to the 19th when we had the worst rates. And then look at the significant drop in oil prices. You're going down, it's basically about $20 a barrel. That's a big, big dip for ICE Brent crude. And that's why it's going to open the door for the 10-year Treasury yield to continue to move lower. The 10-year Treasury yield peaked right here, right around the 19th at 4.67. So 4.67. And right now it is, not that one. Right now it is at 4.45. So it went from 4.67 and it has been dropping significantly and consistently here. You could see, and it is now at 4.45. We want to see it continue to move lower, and that will help. So anyway, it is right now the main thing is we want to continue to cautiously float loans closing in the next 15 days. If we do see Trump endorse this deal and we start to see traffic move through the Strait of Hormuz, it's not going to happen all at once. Remember, Iran is going to be given 30 days to remove the mines. But as we see things start to move, we'll see rates continue to creep a little bit better. Rates can move lower and significantly lower in the next 15 to 30 days. That's basically the second half of June. If we see, George, what are you doing up there? Y'all see George? George, what are you doing? He's looking at the fish tank. We will see rates significantly improve. Quarter point, maybe. I call it significant. Anything over a quarter point. Quarter point, 3/8 of a point. The second half of June, if we start to see ships moving through the Strait of Hormuz, oil drops down into the lower 80s, which it definitely has room to go. So, and I'm talking about Brent crude, not WTI. All of that, what we have on there. So do we flock? No, we don't need to flock. I would float anything closing in 15 days unless it's risk averse and you want to take what's on the table. There's definitely room for rates to improve next week, especially we'll see another, not little mini rally. You're not going to see a big improvement in rates, but you'll see more improvement next week if Trump goes ahead and agrees to this deal. Now, there is risk that if Trump rejects the deal, we could see bonds sell off a little bit and oil prices will jump on that. But that would probably be more of a negotiating tactic and we would see something respond. But for loans closing near term, you got your most risk there. So the weekend for rates scares you. Yeah, Derek, it definitely can be the case, especially if Trump does, turn around on Sunday and say, hey, this deal's not going to work. If he rejects the deal on Sunday, then Monday we're going to see things open up worse. As long as it doesn't happen, though, we're pretty insulated. Reprice risk really is low right now, unless there's headlines that Trump rejects the proposal. It should be a calm day. It should be a calm weekend. If Trump is said to endorse the deal, bonds could even improve if that happens sometime over the weekend or today. So there is that as well. So, all right. Well, good morning, Carmen. Don't worry. We don't mind that you're late. It's okay. So I think that's it for today, y'all. Go ahead and tell me, what is it you guys have planned for the weekend? I'm not going to lie. I am excited. I am going to go and see about getting a new motorcycle today. I got that bug just coming back from my trip. This bike has 31,000 miles on it. It's 6 years old. I put less mileage on it than I usually do after breaking my leg and having some other things slow me down for the riding seasons. But generally, Harleys really, really lose their value when you start getting into the 40,000s for mileage. There's just too many bikes out there that have lower mileage. So I like to tend to roll to something new. And they've come out with some really, really cool new stuff. Let me see. In fact, I'll get y'all's opinion. This afternoon, I am going to go ahead and go to the Harley dealer in Merrillville, Tennessee. And I am looking to pick up this bad boy that they have in stock. Here is the, let me just pop this way. There you go. So here is what I am looking to grab is this is the new Street Glide Limited, and it's got new lines, a lot of new things. I like this green color. It is called Olive Steel Metallic, and then the black. I like it with the black. So I like the blacked out pipes, blacked out engine, blacked out forks. So this is what I am looking at picking up, and that is what I am excited to see if everything goes, if the numbers work, which I'm not expecting it too big of a discount. This is a pretty desired color scheme, and that has a lot to do with it with Harleys. If you're willing to just take whatever color, the dealers will kind of, they get stuck with something, but this one, there's not a lot of them out there. So that's what I am looking for. So don't congratulate me yet, Carmen. I don't have it. We gotta do the deal. So, but yeah, I mean, and Michael, I don't ride bikes, but if I did, I think I would choose that. I'll tell you, it's super comfortable. That's the key. We just did 1,500 miles in a week. When you're riding, we did 287 miles to ride home on Wednesday. When you're riding 300 miles, it's got to be a comfortable bike, and happy wife, happy life. So it has to be comfortable for the passenger as well. And this one does. So Sean says, you get a new bike. I'm getting new tire sensors at Costco. Yeah, not quite as exciting, my man. Not quite as exciting. Thank you, Debbie. Thank you, Vicky. Diana is working an open. Oh, that reminds me. Diana's talking about working an open house. Let me show you this headline. Did y'all? Let me see. Let me bring it back up here. Hold on. Where is it? Okay. So this was an interesting one that I found. Real estate agents are quitting the show, quitting the slow housing market. Real estate agents are quitting the slow housing market. In the fourth year of a struggling market, even real estate professionals who made it this far are reaching a breaking point. And I have to say, I didn't read the article yet, but come on, let's face it. It is such an overly saturated industry with such an easy, bar of entry that people can get in. Almost anybody can get in. Everybody's cousins, friends, girlfriends, best friends, father became a real estate agent. It talked about some of them that were here, but do you guys see any agents getting out? I kind of laugh because this talks about them getting second jobs. I'm like, they've been getting second jobs for years. Most of them already have second jobs. Most of them get into real estate as a second job. But it is, it is kind of an interesting thing here. Do you find that, this has always been a business. It's not even 80-20, it's 90-10. 10% of real estate agents do 90% of the volume. And, I think, otherwise everyone does some little ones. EOM is a great time to buy, only surpassed by end of quarter. End of month, yeah. I don't know that I'm going to get any great thing, Ron, but we will see. We will see. Yeah. Diana said she doesn't see any agents getting out. Does anyone else see any agents getting out? I'm kind of curious on that one. Pat from Foley, Alabama on vacation. Awesome. I hope you are having a great vacation, my friend. I hope you're doing well. I don't see any agents getting out. Does anyone else see any agents getting out? I don't really see a lot of agents getting out either. But it was interesting. About 71% of agents surveyed by NAR in 2025 said the real estate was their only profession. Yeah, right. The lowest proportion on record in survey data going back. They're lying. Hello? Come on. There's nowhere near enough business. Many agents had to get a secondary source of income to pay the bills. Yeah, exactly. And that's always been the case. Give me a break. The housing boom that started in 2020 attracted newcomers to real estate. Many found it tough going after the market slowed. We saw that with mortgage business as well. The number of mortgage originators has remained a little bit more steady since that first wave of people left. But there were, I forgot who it was. I think it was Eddie Perez posted a bunch of the numbers. And don't quote me because I don't remember, but I think Eddie posted it on Facebook that a lot of originators that wouldn't be renewing their licenses in March. And again, I don't know that it was for sure, so don't quote me on that one. But somebody on Facebook had posted that but there's always losses in mortgage. We see that all the time. Our industry, Carmen said, our industry works in cycles. When it's hot, a bunch jump in. When it's tough, they hop out. Yeah, exactly. And it's Ron Siegel, 71% of licensees did 0 transactions last year. Are you talking about real estate? I would believe that. I would absolutely believe that. Isn't that insane? I think people just get their real estate license because they think they're going to do it. But if you're going to do it for a living, you've got to be able to prospect. Pat said, I see a lot of new agents and a lot of retired agents. Yeah, I think there's a changing of the guard for sure. So All right. Well, anyway, thanks for enjoying that part of the conversation with me, my friends. I'm going to wrap it up for today. I will see y'all on Monday. Have a fantastic weekend. Hopefully things go well for me today, and I do come home on a new bike. I'm hoping. I'll see y'all later. Take care, everybody. Bye-bye.